Coming into this year, it was our view that it would be a much more difficult year than we had had in the previous few years, and for a couple of reasons. Number one, the market for several years had run well ahead of the gains in the market had run well ahead of the gains in corporate earnings. That's not long-term sustainable. Ultimately, a market and stock prices and corporate earnings will move in sync over time. Secondly, it's our view that the people were way overestimating what the strength in the economy would be, and our view was that corporate earnings would be much more difficult this year than people were anticipating, and that therefore the market would not necessarily have the ammunition in terms of corporate earnings to go materially higher. And then finally, it was our view that dividends would be a big part of the market return this year. And then one other thing is that we thought we would not be going into a bear market because even though we thought that the market would have a more difficult year, we thought interest rates would stay low enough to keep a floor under the market. And so far, that's pretty much the way the market has played out. And in fact, until 2 weeks ago, that's exactly the way the market had played out. I think that our prediction from the beginning of the year will turn out to be generally correct, a kind of a flattish market. And then I think we can look forward next year to a better year as the market, as stock prices have kind of let themselves be caught up with by earnings. Year to date for the dividend program has been soft. We're down in single digits. I don't like being down. Up is better than down. However, many of our stocks had terrific years last year in terms of price. We're totally pleased about the performance of dividends in these accounts. All the companies are raising their dividends, but the stock prices in many cases have slipped. No major disasters, but just when you get collectively stocks coming in, you get an overall decline in a portfolio, which I think will be corrected over time. Long term, I'm a big believer in the compounding effect, and as I've said to people before, this doesn't occur in 6 months or 1 year. This occurs over a period of decades, and I know that's not most people's time frame, but it's kind of how I think about the stock market as a very long-term proposition. And I can tell you firsthand that stocks bought, high-quality stocks, dividend payers bought in the 1970s, 1980s, many of them now, the annual dividends are more than we paid for the stock in the first place. That will happen again with stocks that were bought in 2008, 2009. But again, it doesn't happen overnight. So when we get our dividends going up at somewhere between 8 and 12% a year, the dividends will double in 9 years or less. So that's a great story. It's the only area I know, dividend growth, that can give people a raise in this kind of difficult economic environment. This is a low turnover portfolio built on high quality companies with great balance sheets, great business models. They allocate capital very well in terms of rewarding shareholders, and so we're fine with the companies we own. I think we have to get through this year, let the sort of flattish earnings for a lot of companies, the currency headwinds get factored in, and then I think we'll be maybe in a better position next year. We still don't see interest rates rising in an important way. I think people are making too much out of whether the Fed will raise interest rates a quarter point or not. We've been of the view that rates won't go up. If they do, I don't think it kills things. If they do, it'll be very minor. So, with interest rates at these levels, every time stocks go down, they become even more attractive compared to the competing asset categories. My view is really good companies that do the right thing, make the products that people want or need, and have good capital allocation. It's just a great long-term way not only to build wealth, but to preserve wealth later on. And I think riding through the vicissitudes of the market is certainly something that I've always believed in.